Good morning. Today we will discuss about operating and financial lease. Before going to operating and financial lease or as a whole lease itself, let us understand one concept that whenever we are purchasing any fixed asset, it becomes a capital expenditure. Now, this capital expenditure results in acquisition of an asset and that too a fixed asset. Now, if a fixed asset is purchased, there are certain advantages that will give us the utility for a number of years. We need not give any rent or something like that, which will be recurring in nature again, and our cost of production will increase. But there are some disadvantages also. What are the disadvantages? The first disadvantage is the responsibility of maintenance. If we will purchase a fixed asset, definitely it will require some maintenance, and that maintenance expenses will have to be borne by us, which will reduce the profit otherwise which we would have earned. That is number one. And number two, the consequential loss at the time of disposal. Take the case of a motor car. If we are having one motor car, if we have purchased a motor car, not only the maintenance cost will be there, but also after 10 years or 5 years or 15 years, whatever it may be the life of the asset, we will dispose it off, we will sell it out. At that time, there is the risk of again losses, that is the consequential loss. So, in that case what happens, if we hire a motor car like taxi, Uber, there what happens, we need not worry about the fall in the price at the time of disposal. Similarly, we need not worry about the maintenance. So, it is sometimes thought better to have a leasehold fixed asset rather than purchasing it. So, the only alternative left with us is not to purchase, but to take a lease of a fixed asset. This leasing has gained popularity first of all in the western countries and later on in Japan and Europe also. So, these countries are pioneer in this aspect, that is taking the lease. It has become more popular there. Of late in India also it is gaining popularity. Now, coming to the applicability, to which type of fixed assets it will be applicable. It will be applicable to land and building, plant and machinery, mines, motor cars or motor vehicles rather we can write. So, popularly these things we can take on lease. Now, coming to the definition of lease. What is a lease? Lease is an agreement whereby the lessor conveys to the lessee in return for rent, the right to use an asset for an agreed period of time. So, this is the definition of lease. Lease is an agreement whereby, first of all, it is an agreement between two parties whereby the lessor conveys to the lessee. So, the two parties are lessor and lessee. We will discuss about them in detail. In return for rent. So, what is the consideration? The consideration is the rent, the right to use the asset. Again, what will be used? The right to use an asset. If you are taking a motor car on lease for 1 month or 6 months, then for 6 months you have got every right to use it. So, use an asset for an agreed period of time. The period is certain and it has been agreed upon by both the parties, that is the lessor and lessee. Now, what are the terms used in this? First of all, the terms used are lessor, lessee, then you have got non-cancelable lease, and then lease term, minimum lease payment, then useful life, and residual value. So, we will be coming across these terms very often in this chapter. So, what does they mean? Lessor means the landlord or the owner, the original owner who leases the property out to somebody called lessee. So, lessee is the person who takes the lease, that means he has to give the rent. Lessor is the person who is the owner, real owner. So, he takes the rent from the lessee. Then non-cancelable lease. A lease can be revocable or irrevocable. Irrevocable means non-cancelable. It cannot be cancelled. It has to be continued. Then lease term. The period should be exactly expressed, say 5 years or 10 years or 20 years, whatever it may be. So, the lease term must be adhered to. There is a particular number of years for which the lease has been given by the lessor to the lessee. So, he has to give up that lease after the stipulated period of time, which is called lease term. Then minimum lease payment. Suppose we are taking a coal mine and it has been agreed that per ton when you raise you have to give 100 rupees. Now, in a particular year only 2 tons have been extracted, that means 200 rupees should be given, but 200 rupees is too less for the lessor. So, the lessor, while entering into the agreement between the lessor and the lessee, it has been agreed by both of them that the minimum rent should be given. Suppose the minimum rent is 20,000, that means whether you lift it or not, whether you extract it or not, sufficient to 20,000, amounting to 20,000, the royalty amounting to 20,000, you have to give 20,000. However, if the actual royalty will be more than 20,000, you have to give the actual one, but below that, that 20,000 minimum lease payment will have to be made, that is called minimum lease payment. Then useful life already we have discussed, the life may be more than the lease period. It has been given for a particular period, but the life of the asset may be 100 years, but for 20 years we have given to Mr. A, for another 20 years to give it has been given to B, for another 10 years to C, like this it can be given. So, that is the useful life. Then residual value is the reasonable value for which it can be sold at the end of the expired term, that means expired life. If the life of the asset is say 100 years, after 100 years for how much we can sell it reasonably, estimated value, that is called the residual value. Now, we will be coming to two types of leases, that is number one, operating lease, and the second one is financial lease. So, there are two types of leases, that is operating lease and financial lease. Operating lease and financial lease, let us in detail know their characteristics and their features. Then also financial lease, we can take the features and also distinguish between the two, that is the operating lease and financial lease. When the lease does not secure the lessor for two things, that is recovery of his capital outlay and recovery of return on the funds invested during the lease terms, then it becomes a operating lease. Let me write what are the main things about the operating lease. When the lease does not secure the lessor for number one, recovery of his capital outlay, and number two, recovery of return on the funds invested during the lease term. So, when a lease is of this type, that is where recovery of his capital outlay is not secured. Suppose the original owner has purchased the property for rupees 1 lakh. Now, it has given it on rent to somebody and it has given for 20 years, but within that 20 years period it cannot recover the capital outlay. That means that 1 lakh rupees is not fully recovered. So, there is no guarantee that it will be secured or it will be recovered. So, there it becomes a operating lease. Similarly, when the recovery of return on the funds invested during the lease term is there. So, first of all recovery of his capital outlay, then recovery of return on the funds invested. So, the return which he is getting is not able to cover the entire amount of investment during the lease term. That means, within this period of 10 years or 20 years, not only the capital outlay, but also the interest which is there, otherwise if you would have invested somewhere otherwise, then he would have got, that is also not going to be recovered fully. So, in that case we will call it an operating lease. So, what are the characteristics of this operating lease? For the lessor, the lease is a fixed asset. So, the lessor, that means the original owner, for him this lease is a fixed asset, because he has given some capital expenditures in order to purchase it. Now, he is giving it on lease or rent. So, what he will be getting will be the income or the return on the fixed asset. But for the lessor, first of all we have to assume that it is a fixed asset. The second point is rental receivable is a revenue income. So, by giving the lease, what we are expecting to get? We are going to get the rental. So, that rental becomes our recurring income. So, because it is a recurring income or an income of recurring nature, so naturally it is a revenue item or revenue income. The third one is costs incurred in earning the rental income is a charge against cost incurred to earn the rental income is a charge as revenue expenditure. Income is a charge as a revenue expenditure including depreciation. Let us explain this one. While we are purchasing the revenue, I mean while we are receiving the rental, it becomes a revenue income. Now, in order to receive this income, whatever expenditures we are incurring, suppose one agent has been appointed in order to collect that rental. So, that is an expenditure, that is a cost incurred to earn the rental income. Similarly, suppose we are making some maintenance of the fixed asset. So, that is also cost incurred to earn the rental income. So, this will be this cost which we are spending in order to earn that income is a revenue expenditure. Similarly, depreciation, maintenance, repairs, etc. will be our expenditure, that is a revenue expenditure. Then next point is the lease rental is a revenue expense for the lessee. For the lessor it was a revenue income, but for the lessee rental is a revenue expenditure. So, for the lessee who is giving the rent, that rent becomes his revenue expenditure, because it will be recurring in nature and every year it will have to give the rental. Then the last point is usually it contains a cancellation clause. By virtue of which the lessee can terminate the lease before full life by giving due notice to the lessor. So, this is the last point. Usually it contains a cancellation clause. What is that cancellation clause? Whenever an agreement is there for the lease, it will be for a certain number of years, suppose say for 20 years. But before 20 years also, if there is a clause of cancellation, if this lease contains a clause of cancellation, then it can be cancelled by the lessee with just giving a notice to the lessor, but it should be with proper timing and it should be served in a particular procedure. So, once the notice has been given, then it can be cancelled by virtue of this clause only, by virtue of which the lessee can terminate the lease before full time. Suppose it is for 20 years, but after 15 years if he does not think it to continue, then the lessee can give a due notice to the lessor and the contract can be terminated or the lease can be terminated. So, these are the characteristics of operating lease. First of all, let us recapitulate this one. For the lessor, the lease is a fixed asset, then the rental received is a revenue income for him, then cost incurred in order to earn this and the maintenance expenses and the depreciation all will be revenue expenditures. Then, so far as the lessee is concerned, it becomes a, for the lessee rental is a revenue expenditure. For him it was revenue income, but for the lessee it will be revenue expenditure. Then cancellation clause. What is that cancellation clause? This type of lease, that is operating lease only, not the financial lease, only the operating lease contains a clause, can contain a clause of cancellation. By this clause, the lessee is at liberty to bring the contract to an end by giving a due notice before the full life of the lease. If the lease is for 20 years, as I have given you the example, before 20 years also it can terminate the lease if there is a clause of cancellation. So, these are the characteristics of operating lease. Now, we will come to financial lease. So, the second type of lease is called financial lease. And what is a financial lease? This may be also called capital lease. Financial lease is called capital lease. Why we will discuss, but for the time being just know that financial lease can be also called a capital lease. A finance lease is a lease that transfers substantially all the risks and rewards incidental to ownership of an asset. A finance lease is a lease, it is a lease where that transfers substantially all the risks and reward all the risks and rewards incidental to ownership incidental to ownership of an asset. So, here goes the definition. Financial lease is a lease that transfers substantially all the risks and rewards incidental to ownership of an asset. It means, if I will be leasing a financial, I will be giving a financial lease of my car to you, it means almost I have given up the ownership. For sake of name, the ownership is with me, but all the risk and rewards belong to you. What does that mean? That means all the risks, suppose the car faces or car meets with an accident, then all the repair work will have to be done by you, because you are the lessee and you have taken a financial lease, not the operating lease. If it would have been a case of operating lease, I would have taken the expenses, but now you have to bear the expenses. So, all the risks are involved will be transferred to him. Then the rewards also, that means if some profit is there due to that, that reward is also belonging to you, belonging to the lessee. Now, in such type of a lease, the present value of the minimum lease payments at the commencement of the lease exceeds or is equal to the fair value of the leased asset. This is the technical point of financial lease. What is that? The present value of the minimum lease payments at the commencement of the lease exceeds or is equal to the fair value of the leased asset. The technical point is that the present value of the minimum lease payments, suppose the minimum lease payments are say 10,000 annually, 10,000 per annum, and it is given for 5 years. The lease period is suppose 5 years. So, what is the present value? Today suppose it has been given for 5 years. So, in the coming 5 years, I am going to receive 10,000 rupees per annum in the first year, second year, third year, fourth year and fifth year. So, 10,000 every time I will be receiving. So, what is the present value? Present value of this 10,000 which I am going to receive after 1 year may be suppose 9,000. It differs from rate of interest to rate of interest. Depending on the rate of interest, this amount will be different. So, there is a particular table for finding out the present value. So, present value at suppose 10% per annum is coming to 9,000, that is the table value. Similarly, the amount which I am going to receive after 2 years, the same 10,000 will not be equal to 10,000, will be less than 10,000, even less than 9,000. Suppose this is 8,200. Similarly, the third one 10,000 rupees which I shall receive after 3 years, its present value may be 7,500. Suppose this is 6,300 and suppose this is 6,000, like this. Suppose these are the present values which we have found out by multiplying the table value from the present value table 10 by 10,000. So, it is coming to like this. So, here mind you, I told you that if it is a 10%, it will be different, if it is a 8%, again it will be more, little bit more, like this it will be there. So, anyway, now we will be adding that so it is coming to 37,000. So, the present value of the minimum lease payment at the commencement of the lease that we have calculated just before the lease starts exceeds or is equal to the fair value of the leased asset. If this 37,000 is more or equal than the face value of the or the fair value of the asset leased out, then it becomes a financial lease. In this case, if suppose the fair value is suppose 35,000, what we are getting actually is 10,000 into 5, 50,000, but its present value today is 37,000. Anyway, the present value is exceeding the fair value. Even if it would have been 37,000, the fair value still there. So, if the fair value is less than the amount of the present value which you are going to get, then it is a case of financial lease, because we are getting the full value, rather more than the full value we are getting. That is why it is called a capital lease, because we are altogether selling it, just like selling it out to him. That is why it is called a capital lease. So, in this way, if the fair value is less than the present value of all the payments which you are going to receive in way of rent, then it becomes a financial lease. Actually, this method has been derived, which is equal to that of borrowing for acquiring an asset. If our lessee would have borrowed the cost of this building or this lease from a bank and going on giving rent, in that case his position and in this case his position are almost the same. It is only the difference is he was taking a loan in order to get this, in order to purchase this asset, and here he is not going to any bank or any financial institution to collect the loan, but we are giving just like a loan. That means, the amount of rent which we are getting is just like the interest along with the principal. So, in this way it is just a replica of the purchase of an asset by taking a loan from the bank. So, that is why it is called a capital lease or a financial lease. Now, what are the characteristics of this type of contracts? So, the first characteristic is contract is irrevocable. So, this contract is irrevocable or non-cancelable. It cannot be cancelled. Once the contract has been entered into by the lessor and lessee, the lessee does not have any right, neither the lessor, to revoke it, to cancel it. So, in that case it was revocable, but here it is irrevocable. The second point is the lessor will try to recover his original investment plus a reasonable return on such investment during the lease term. So, here let us analyze this point. The lessor will try to recover his original investment. Suppose he has invested rupees 1 lakh in order to purchase that asset, the original owner. He has purchased it for rupees 1 lakh. So, not only 1 lakh rupees, but also a reasonable rate of return. Suppose the rate of return is 10%. So, 10% interest on that 1 lakh rupees for those 5 years, if the lease period is 5 years. Within that 5 years, he should be able to collect, or he should at least he will try to recover his original investment of 1 lakh rupees plus whatever interest, suppose it is coming to 50,000, that is 1,50,000 all total during the lease term of 5 years. If it is more, then within that period. So, this is the second characteristic. The third characteristic is the lessor acts as a financier. See, the lessor acts as a financier who is not interested in the well-being of the asset on lease. So, the lessor acts as a financier. Just like the bank finances, suppose the lessor has finance, it is just like his role is just like the bank's role. So, he is not interested in the well-being of the asset, because the asset he is not trying to recover, he tries to recover the investment. So, whatever you do with the asset, he is least bothered about that. So, the well-being of the asset is not important for him, rather he is interested to collect the total amount, that is the original investment and the reasonable rate of return. So, he is not interested in the well-being of the asset, whether you take care of it, whether you maintain it or not, that is not his lookout. So, this is the third characteristic, and the last characteristic is the cost of maintenance insurance and taxes are borne by the lessee. So, the last point is that the cost of maintenance in order to continue, in order to run the machine, suppose that is the maintenance, then insurance, time to time you will have to give every year annual charges on insurance, then taxes. So, any tax also levied by the government, that also you have to give, you means the lessee. The lessee will have to give, the lessee has to bear all these expenses, and the lessor has nothing to do with that. He is not bothered about the well-being, he is not bothered about the expenses, about the maintenance, about the depreciation, about the insurance, everything will be borne by the lessee, because it has been treated just like a sale. Now, from these points it is very clear that both the types of the lease, that is your operating lease and financial lease, differ in many points. So, what are their differences, or how can we distinguish between financial lease and operating lease? So, first of all we will be taking the basis, you can write the serial number also here. So, basis, then this is regarding the operating lease and this is financial lease. So, the first point of difference is regarding the duration. Usually the operating lease is for a limited number of years, or you can say short period. So, usually for a shorter duration, no relation to the useful life of the leased asset is there. So, irrespective of that, for a shorter period, suppose we have purchased a truck, a lorry, and that can run for 30 years, but we are giving to somebody for 5 years only. So, for 5 years, which is a very short period in comparison to the whole life of the asset, that is 30 years, it has nothing to do with that 30 years. So, for how many years we have given it? For a shorter period we give it, but this will be related to the useful life of the asset, because for the whole life of the asset this will be given. So, this is related to life of the asset which is longer. So, this is the first point. Second point is cancellation. We have already discussed, so far as the cancellation clause is there, it can be there in case of a operating lease. That means it can be revocable. That means the term, before the end of the term of the lease, it can be revoked or it can be cancelled by giving a notice, and in this case it is not revocable, or you can say irrevocable. That is the second point. And the third point is regarding the expenses, who bears it, who bears the expenses. Expenses borne by, like maintenance, your depreciation, taxes, insurance, etc., all these are borne by the lessor. And so far as the financial lease is concerned, these expenses are borne by the lessee. The fourth point is risk of obsolescence. Obsolescence means outdated. When it becomes outdated, it is not for any further use. Who will bear that risk? In the first case, it is borne by the lessor. And in case of financial lease, the lessor is not responsible for any obsolescence. So, the lessee becomes the risk taker of obsolescence. If there will be any obsolescence in case of a financial lease, it will be borne by the lessee, not by the lessor, because the lessor is not concerned with the well-being of the asset leased. Then rentals. Sufficiency of rental to recover the cost. In case of operating lease, it is not sufficient. Usually the rentals are not sufficient to fully amortize the cost of the asset. not fully able to amortize the cost. That means, whatever rental we are receiving in case of a operating lease, it is not sufficient to amortize the full value of the asset, but in case of financial lease it is sufficient. Rental covers both. Rental covers number 1 cost of the asset, and number 2 a reasonable rate of return. In case of financial lease, not only the cost of the asset is recovered, but also a reasonable rate of return is also recovered through the rents. So, rents are more than these two taken total. Then the last point is option to buy back the lessee. Sorry. Number 6, options to buy. The lessee cannot buy the leased property in case of operating lease. Lessee cannot buy the asset. The lessee cannot buy the asset in case of the operating lease, but here lessee can buy. Lessee has an option to buy the asset. For that it will have to give a nominal price. Lessee has an option to buy the asset by giving a nominal value after the expiry of the lease period. After the lease period. So, this is the last point. So, let us recapitulate. First of all, on the basis of duration, it is for the shorter duration and it is related to life of the asset, which is longer. The entire life of the asset it will be leased out. So, in case of financial lease, definitely the period is longer. Now, coming to cancellation, that cancellation clause is present, can be present in case of an operating lease, whereas it is not available in case of financial lease. Therefore, it is revocable or cancelable, whereas it is not revocable or irrevocable. Number 3 is expenses borne by whom? Who bears all the expenses of insurance, maintenance, taxes, etc. So, in the case of your operating lease, it is the lessor who bears all the expenses, whereas in case of financial lease, all the expenses will have to be borne by the lessee. Then coming to the risk of obsolescence, that means it becomes outdated, no longer in use, then who will bear that risk? The lessor bears the risk in case of operating lease and the lessee bears in case of financial lease. Then whether it is sufficient, that is rentals, are able to recover the cost or not. Whatever is the cost of the asset, whether only the rentals will can recover the total amount or not. It is not possible, not fully able to amortize the cost. If the cost is 1 lakh, suppose you are receiving rent 70,000, that means it is not able to recover the full cost. Then the second one, in case of your financial lease, however, rental covers not only the cost of the asset, it covers not only the cost of the asset, but also a reasonable rate of return. That means it is a capital lease. Then options to buy. If the lessee wants to buy the asset, in case of operating lease, he cannot buy that asset. But in case of financial lease, there is an option with the lessee that he can purchase it by giving a reasonable or nominal value, but after the end of the lease period. If it is for 10 years, the lease has been given, then it can be purchased by the lessee by giving a nominal price, but after the lease period, lease time, lease term is over, that is after that period. So, this is all regarding the operating lease and financial lease. Thank you.